Assalamualaikum. My name is SITI FATIHAH binti Muhammad and my metric number is 284576. So, we are from Group 8. We'll present about our group project, which is assembly, rebalancing and performance of a portfolio with different asset classes. So, for introduction, we were assigned RM500,000 ringgit and our obligation is strategically choose how to invest this amount. We have made the decision to slowly invest RM300,000 ringgit, setting aside RM50,000 ringgit for a cash reserve and additional RM150,000 ringgit to launch a business. We place a high value on diversification by making investment in 5 distinct equities market industries. The 5 stocks were the subject of the first rebalancing, which our company have been chosen: Bermas Auto Berhad, Apollo Food Holding Berhad, Sunway Construction Group Berhad, Kasan Rubber Industrial Berhad, UITL Power International Berhad, and the worldwide stock of Unilever PLC was then added to our investment portfolio during the second rebalance. Next, for the economic analysis, in domestic economics, GDP is predicted to rise by 4.5% with the service sector leading at 5.5%. The unemployment rate were at 3.3%, income level increased by 5.1% that helped to maintain overall economic stability. Malaysia's inflation has been efficiently controlled with an average 2.5% in 2023 and expected to increase between 2.8% to 3.5% in 2024. For global economics, the International Monetary Fund (IMF) anticipates global GDP growth of 3.1% in 2024, higher than earlier projection because to improve resilience in big countries such as the US and substantial developing market. Next, for industry analysis, in Bermas Auto Berhad, company that operate in the automotive industry in Malaysia with its subsidiaries being involved in this industry. Bermas deals in automotive spare parts and offer after-sales service in the Malaysian market. The company primarily focuses on the domestic marketing and selling of CBU and CKD cars. For Apollo Food Holding Berhad, established in 1994 and is one of the Malaysian companies that specialize in the production of compound chocolate, confectionery and layer cake. Apollo Food Industries is one of the leading companies that deal in chocolate confectionery and layers cake in Malaysia, where it has many branches and is reputable in the international market as well. Apollo Food Industries keep on adding new product to its portfolio and improving the distribution channels. Sunway Construction Group Berhad, also known as Suncon, has extensive experience handling and executing construction projects at all phases, including construction, commencement and completion. Sunway Construction Group Berhad provide a one-stop turnkey construction service. The company specializes in construction service, civil and structural engineering, infrastructure provides and construction service, foundation and geotechnical service, MEP consulting service, renewable energy service and precast concrete production and supply. For Kasan Rubber, it mainly focuses on the production of rubber goods for domestic market consumption and export market only. Kasan operates through 4 main segments. It categorizes its product as technical rubber product and glove and clean room product. The business area of technical rubber product focus on manufacturing and marketing a variety of high technical engineering rubber product, service infrastructure, automobile and industry segment. The strong background and diverse product range have enabled continued expanding and contribute significantly to the manufacturing of rubber products. For YTL Power International, involved in the business of investment holding and offering administrative as well as technical support. The company operates through 4 segments. This consists of electricity, supply, water and sewerage, telecommunication and investment companies. The investment holding activities also comprise different subsidiaries, including YTL Energy Holding, Sdn Berhad. And lastly, for the Unilever PLC, It's among the largest FMC manufacturers of fast-moving consumer goods based in the United Kingdom. It is engaged in the business through 5 major segments. The company is split into the following division: beauty and well-being, personal care, home care, nutrition and health, and ice cream. K18 was developed from the same company, which is a hair care product under biological science.
Assalamualaikum and very good day. My name is Rofana Jum'at Bakri, mentor number 28468. I will now proceed with fundamental analysis of SITI company. The first one is Burmas Auto Berhad. Burmas has positive return on equity of 33.67 as it indicates efficient management and significant profit generation relative to shareholder equity. Besides, it also has earning per share of 0.30, demonstrates strong profitability and profit creation for shareholders. Price to earning ratio of 8.46, appealing to value of investor as it suggests that the stock is undervalued. Average net margin of 0.1% over past 5 years, worryingly small as indicates a tight coupling between sales and cost of goods sold. Price to book ratio 3.62 reflects market perception of company's fair value at approximately 3.5 times its book value, indicates it considered an attractive investment. Next, Apollo Food Holdings Berhad has average net margin 10.11% over past 5 years. It indicates of robust ability to convert sales into earnings. Besides, it also has earning per share of 0.67, which demonstrates high earnings growth for investor, and ROE of 9.26, where it has fair level, illustrate efficient capital use and fair returns for shareholders. Price to book ratio of 2.40, higher than peers but still reasonable, indicates market valuation. And lastly, strong returns and good capital management signals a potential gem among listed packaging companies of Bursa Kuala Lumpur Stock Exchange. Next, Sunway Construction Group Berhad. It has great track record and growth potential, where Sunway Construction Group Berhad has been performing well and has the potential to further growth. And it has average 5-year net profit margin 6.06%, indicates good profitability from its business operation. Besides, it has consistent earnings growth rate of 0.11%, appeals to investors looking for growth in the volatile construction sector. High return on equity (ROE) 17.61% demonstrate efficient use of earnings to generate the profit. Besides, it also has no debt obligation and it reduces repayment concern, making it less risky investment. Current PE ratio of 37.30, slightly above true value. The industry average of 16.40 suggests that the stock is overvalued compared to the construction peers. And lastly, price to book ratio 6.49 indicates that the investors are overly confident in the company's future project execution, which leads to overvaluation based on its book value. Next, for concern about industry, it shows that it has high profitability with 18.43 5-year average net margin. It also has impressive return on equity of 33.28, which demonstrates efficient use of equity to generate strong profit. Price to book value ratio of 1.62 shows that the stock is fair value compared to its book value. And high PE ratio of 90.54% suggests that the stock is overvalued, and it cautions that potential shareholders. Low earning per share of 0.01 shows that despite the high profitability and market confidence, it reflects very low earnings. And for the future growth prospect, it is important to consider how the future growth impacts overall valuation and price momentum. Next, YTL Power International Berhad. It has moderate valuation metrics and steady profitability, where it makes the YTL an attractive investment. The net margin of 5.43 over the past 5 years indicates profitability, and earning per share of 0.25 flat, solid earnings generation per share. Return on equity of 6.54 suggests a minimum but stable returns on shareholder equity. And price to earning ratio of 11.99 indicates that the stock price is reasonably valued in relation to its earning and appeal to the value investor. Balanced investment opportunity where it offers sustainable profitability and decent valuation for investors that seek stable returns with moderate growth prospects. Last but not least, Unilever PLC, which is the international company, it has efficient capitalization and highly profitable operation. And the 5-year average net margin of 13.31 reflects strong profit generation, and earning per share of 2.58 indicates high profit supply. Return on equity of 43.12 demonstrates exceptional management performance in generating return on shareholder equity. And higher price to book ratio suggests that investor values the company as growth stock despite the various headwinds. And the steady financial result and strong capital allocation profile appeals to investors who seeking predictable and cash generative investment with higher ROIC and mid-single digit revenue growth.
Hi, my name is SAFIYYA BINTI RASHID and my metric number is 288399. I will explain the result of analysis for the first rebalance, which is from 2 February 2034 until 3 May 2034. The first one is correction of equity for the first rebalance. The table highlights the relationship between the 5 selected stock and the KLCR, which is what reflect the changes occurring in the market. Through the correlation table, we can also deduce that the most of the stock included in this research has a very low to moderate positive correlation with KLCI. Sunway Construction Group Berhad has the value of 0.1593, indicate a mid positive correlation with the KLCI, meaning that there was a moderate inclination for the stock return to move in the same manner as the market. Similarly to the Kausan Rubber Industry Berhad and Burmas Auto Berhad, show even lower positive correlation of 0.1841 and 0.0818 respectively. However, YTL Power International Berhad is moderately positive to the extent of 0.4551, placing the average daily trading volume at 4551 with the KLCI suggesting a closer correlation with the market. Net is CAPM and beta analysis for the first rebalance. The table shows YTL Power International Berhad has got the highest expected return of 0.78328% out of the 5 stocks under the consideration. However, beta of 3.03649 also suggests that respective stock is rather volatile compared to the other market. Next up, Sunway Construction Group Berhad with expected return of 0.19842% and the beta equal to 0.67291, illustrating moderate risk. The second company that can be discussed is Kausan Rubber Industry Berhad. The expected return is construct in 0.19617%, while the beta is 0.66355, which suggests moderate risk. The expected return of Burmas Auto Berhad is 0.07996%, and again it lower than above mentioned stock, and the beta of 0.18051, which is the lowest among the 5 and represent the very low risk compared to the other market. This is Apollo Food Holding Berhad, which has an expected portfolio return of negative 0.12961% and the beta of negative 0.65318, indicating inverse movement to the market trend. Based on the table, most of the stocks have beta below 1, meaning they are less influenced by the market. However, YTL Power International Berhad stand out with the high beta of 3.03649, indicating it's more volatile. It is expected to have the highest return due to its high beta. On the other hand, Apollo Food Holding Berhad has a negative expected return because it's moved opposite to the market. This shows that higher beta stock like YTL Power International Berhad can offer higher return but also come with greater risk compared to lower beta stock like Burmas Auto Berhad. Allocation for the first portfolio rebalance is guidelined mainly by the mean returns of each stock, which is served as a key indicator of their past performance. Sunway Construction Group Berhad boasting a mean return of 253.43%, comma a largest allocation at 38.45%, underscoring confidence in its ability to enhance our portfolio return insignificantly. Conversely, stocks like Apollo Food Holding Berhad with an exceptionally high mean return of 25265.55% are allocated to conservative 1% aiming capitalize on potential high reward while managing exposure to volatile return. Concern urban industry Berhad, despite being the newest addition with the mean return of 252.72%, received the highest allocation of 58.55%, highlighting its strong performance and strategic importance in the portfolio, particularly within the rubber market. Burma's Auto Berhad and YTL Power International Berhad with a mean return of 25194.81% and 25414.49% respectively, are allocated 1% each, reflecting a cautious approach to balance potential return with lower risk. With all allocations summing to 100%, this initial rebalance not only focus on maximizing return but also strategically manage risk through diversified asset allocation based on their historical performance metric. The profit and loss statement from the first portfolio rebalance revealed the distinct contribution of each stock during the period. Sami Construction Group, Berhad with the largest portfolio allocation of 44.2%, delivered an impressive return of 44.2% and generated a substantial profit of RM337,333.46. Location is pivotal role in boosting our portfolio return. Apollo Food Holding Berhad, despite its smaller 1% allocation, contribute positively with 1% return and modest profit of RM7632.10. Concern urban industry Berhad allocated 52.6%, stood up with a high return of 52.6% and substantial profit of RM402980.36, underscoring its significant impact on portfolio performance. Conversely, Burma's Auto Berhad recorded a slight negative return, resulting in minor net loss of RM65.51, while YTL Power International Berhad contribute positively with 0.86% return and a profit of RM6592.71. Overall, starting from the initial capital of RM763210.12, the portfolio achieved a robust return of 35.27%, translating into a total profit of RM2692221.69, driven by the strong performance of key holdings like Sami Construction and Kosan Rubber Industry.
From May 4 to May 31, our portfolio underwent a second rebalance. These sections cover the correlation analysis, APM and beta analysis, allocation strategy, and profit and loss for this period. For the correlation of equities, for the second rebalance, it's important to understand the correlation between the equities and the KSI to help us assess the diversifications. For the Sunway Construction Group, it shows a weak negative correlation for the most stock and also a slight positive with the KSI. It suggests as the price movement often diverge from the market. For the Apollo Food Holding, it has a negative correlation with Sunway and Kosan Industry, which indicate the independent or opposite movement. For the Kosan Rubber Industry, it exhibits the miscorrelation with a moderate positive correlation with the KSI, and it suggests some alignment with the market trends. For the Burma's Auto, it shows a weak correlation overall, which indicate the independent price movement. For the YTL Power International Berhad, it demonstrates a moderate positive correlation with Sunway and Kosan Industry and shows some of the alignment with this stock and the market. For the Unilever PLC, it has a varying correlation, notably with Burma's Auto Berhad, and it indicates some alignment. For the CAPM and beta value analysis for the secondary balance, it's important because it helps us to provide insight into the risk and expected return of each stock. For the Sunway Group, it has the highest beta of 2.28843, which indicate the high volatility and a higher expected return. With Apollo Food Holding Berhad has a lower beta of 0.40099, which indicate the stability and moderate expected return. For the Kosan Rubber Industry, it has a beta of negative 0.98384, which signify the inverse relationship with the market, and negligible CAPM of negative 0.00142. And the Burma's Auto Berhad has a beta of 0.20105, which indicate the stability and a slightly higher expected return. And the YTL Power International Berhad has a high beta of 2.05416, which indicate high volatility and high unexpected return. And lastly, the Unilever PLC has a beta of 0.24x76, which indicate lower volatility and a moderate expected return. For the allocation for secondary balance, the allocation strategy aims to optimize the performance, with Sunway Group allocate 9.24% due to its mean return of 72%. Apollo Food Holding Berhad has the largest allocation in all of the stock, which with 23.82%, with a mean return of 55.14%. Kosan Industry Berhad has a conservative allocation of 1.41%, and Burmas Auto Berhad has an allocation of 20.44% with a return of 75.07%. And YTL Power International Berhad is allocate their with a 2.04% with a return of 36.68%. And lastly, the Unilever PLC has a significant allocation of 43.04% with a return of 0.25%. And for the profit and loss for the secondary balance, the secondary balance periods result in a loss with an over return of negative 18.02%. It result in a loss of RM 186,048 ringgit and 44 cents. The highest losses that contributed in all the portfolio are from the Sunway Group, with a significant loss of RM 220,992 ringgit and 60 cents, while for the highest contribute profit from most of the stock is the Kosa Industry with 12,836 ringgit and 60 cents. Despite the positive return from the most stocks, the immense loss from the Sunway Group heavily impact the overall portfolio.
Hi, my name is Nurul Damia BATRISYIA. My metric number is 288030. I will explain about final rebalancing, and now I will briefly discuss about the correlation between our portfolio stocks and the KLCI index. Sunway Construction Group Berhad has a very mild positive correlation of 0.0472 with the KLCI, providing strong diversification benefits. Kosan Rubber Industry Berhad shows a moderate positive correlation of 0.4480, aligning somewhat with the market trends. Burmas Auto Berhad has a low positive correlation of 0.2664, offering a balance between market alignment and diversification. YTL Power International Berhad exhibits a low to moderate correlation of 0.2370, adding slight stability to the portfolio. Lastly, Unilever PLC has the highest correlation with the KLCI at 0.5729, indicating a strong alignment with market movements. In summary, our portfolio combines diversification with strategic market alignment, balancing risk and return. This is a brief overview of our CAPM and beta analysis for the final rebalance. Apollo Food Holdings has the highest expected return at 0.23385%, but a beta of negative 1.81337%, indicating negative market influence. Sunway Construction Berhad has an expected return of negative 0.01% and a beta of 0.39%, showing a moderate market stability. Kosan Rubber Industries Berhad has the highest beta at 2.52%, reflecting high market sensitivity and risk with an expected return of negative 0.24%. Burmas Auto Berhad offers of 0.71% expected return and a beta of negative 0.4%, moving inversely to the market. YTL Power International Berhad has a negative 0.09% expected return and a beta of 1.13%, indicating higher market influence. Most stocks have betas below 1, showing less market influence and more stability, while higher beta stocks offer higher returns but greater risk. Let me give you a quick summary of our final rebalance allocations. Sunway Construction Group Berhad has a mean return of 3.14% and the largest allocation of 4.9%, showing confidence in its potential. Apollo Food Holdings Berhad has a mean return of negative 82.77% with a 7.58% allocation aiming to manage volatility while seeking high rewards. Kosan Rubber Industri Berhad boasts a 55.88% mean return with 1% allocation, reflecting strong performance and strategic importance. Burmas Auto Berhad has a mean return of 43.9% with 19.25% allocation, balancing potential returns with a lower risk. YTL Power Industry Berhad shows a negative 11.03% mean return with 1% allocation, taking a cautious approach. In summary, we balance confidence in high performers with caution in risk management. Lastly, our final rebalance profit and loss. Sunway Construction Group Berhad returned 18.67%, yielding 9,771 ringgit and a 6.18% allocation. Apollo Food Holdings Berhad saw a negative 5.03% return, resulting in 2,065 ringgit loss despite its 4.85% allocation. Kosan Ramai Industri Berhad contributed 150 ringgit and 47% profit with a 1% allocation and 1.78% return. Burmas Auto Berhad generated 2,307 ringgit and 72 profit, achieving a 1.63% return with a 16.7% allocation. YTL Power International Industry Berhad recorded a negative 2.01% return, resulting in a 169 ringgit and 96 cent loss with a 1% allocation. Unilever PLC delivered 30,788 ringgit and 32 cents profit, the highest with a 2.32% return and 70.26% allocation. Overall, Sunway Construction and Unilever PLC were significant contributors, while Apollo Foods faced challenge. Thank you, that's all from me.
Assalamualaikum, my name is SITI UMAIRAH binti AEIDI and my metric number is 288494. Based on the three-figure benchmark portfolio, the comparison between CAPM expected returns and actual return across different periods from January 2023 to June 2024 reveals significant variation influenced by both systematic and unsystematic risks. Initially, stocks like Sunway Construction and Apollo Food Holding greatly exceed CAPM expectation, driven by strong operational performance or favorable market sentiment. However, during subsequent rebalance, performance diverged. Some stock maintained slight outperformance, while others like YTL Power International experienced notable underperformance, possibly due to overestimate market condition or company-specific challenge. The addition of Unilever PLC in the second rebalance from 1st January 2024 further underscored the fluctuating nature of returns relative to CAPM projection. This analysis underscores the need for continuous portfolio monitoring and adjustment to navigate changing market dynamics effectively. The performance against the Kuala Lumpur Composite Index from January 2023 up to now has been very volatile, with a trend of heavy gains and heavy losses. In January 2023, the portfolio gained 52.62%, performing very impressively against the LCI, which on the other hand showed a modest gain at 0.78%. In February 2023, its fine performance continued, returning 70.70% versus a decline of negative 2.39% for the KLCI. The portfolio then had a bad performance in May 2023, registering a loss of negative 41.17% compared to KLCI, which lost a relatively smaller amount of negative 2.73%. Now looking back, the recovery continued to be 13.96% to the portfolio managed in July 2023, thus bettering the KLCI's 4.55% it return. The year 2024 remained as volatile after showing a return of negative 1.36% in January, just slightly under the KLCI, which was faring positively with a return of 4.12%. The month of February met a strong resurgence as the portfolio returned 70.36% against 2.30% from KLCI. The conclusion: diversification does not aim at completely avoiding risk but to minimize it as much as possible to gain better chance of return than suffering a total loss. The first rebalancing involved 5 stocks. For the second rebalance, we added the global stock of Unilever plc to take advantage of an established global company performing well. We then work out the overall gain and loss of the portfolio after the rebalancing process, which we compare against the KLCI index as a benchmark. Our overall portfolio return performed the following. Starting with an initial value of 500,000 ringgit Malaysia, we have a profit of 263,203 ringgit Malaysia and 12 cents from the initial portfolio, 269,221 ringgit 69 cents from first rebalance, and a loss of 186,048 ringgit 44 cents from second rebalance. Finalization brings an additional profit of 23,783 ringgit 10 cents to an end value of 870,166 ringgit 47 cents. This brought the total profit to 370,166 ringgit 47 cents, equivalent to a return of 74.03% on our initial investment. Although there was a loss in the second rebalancing, the general performance of the said portfolio gained from our diversified investment strategy. Thank you. That's all from my group.